Hello everybody, welcome to the Centbee Show. I'm your host, Lorien Gamaroff, and my co-host is Kage Ntshingila. Kage, welcome to the show.
Hey, Mr. G.
I'm fine, thanks. You feeling better this week?
Way better, man. The past two episodes, I was a little bit bummed, man.
Yes, you've been moving and now you're in your new place, and so now your mind is free. We can just think about BSV and Centbee and the future of digital currencies.
Yeah, straight up, Mr. G. I mean, it's a Monday, first of the month. So, moving to a new place, it's all new vibes, So I'm freshened up. Hence, we're here now today, our favorite day of the week.
Yes, yeah. Cool. Yes, and we always want to just point out our awesome background here. We were going to get a sign, but when we had our booth at the London Blockchain Conference, we just thought this booth was too cool to get bundled up.
Too cool, Ms. G, because we did have a sign ready.
Yeah.
But the way this booth came out, it was too top notch for us just to put it in the storage,
Yeah, exactly. As we always say, it gives that sense of what Centbee is about. We are a youthful brand. We want young people to be engaged with BSV and digital currencies through Centbee. We want to make an experience that is more fun, more accessible to young people, something that they're used to.
Yeah.
If you're using mobile money, if you're using payment apps, they're all boring. They all look like banks. They're dry and don't have any spirit or any soul to them.
Yeah, and like I said previously, I feel like there's sort of like a generic template that they're using, and it's like one product, which is not fun, for a consumer.
Yeah, I've seen that. When you go and you look at template mobile apps, they all look exactly the same.
Yeah.
They've got that credit card looking design and transactions. It looks really boring.
Yeah,
Centbee is very unique. We're trying to make a product that kind of is more like a social networking app.
Yeah.
And in fact, we've now got available, so you must just check it out in the app stores, our new feature, which is the group chat in Centbee, Chat Pay, we call it. Mm-hmm. And this is where you can send messages and chat to your friends, just like WhatsApp or Telegram. And you can also, inside the chat, you can send money. And the fees are BSV fees, so they're a fraction of a cent. Mm-hmm. And now what we've just released, which you can have access to, is the group payments, where you can create a chat group and you can chat, and then you can send money in the chat group. You can do a split. So let's say I want to send $10 to everybody. You can do that in one go, or if you want to split that $10 amongst the group, you can just choose split. And it's just a great way to split your payments with your friends. Maybe you've gone out to eat or something.
I mean, that's a practical situation because, like as friends, we're hanging out there, and there's always, that moment where we're trying to, split the bill. So Centbee having to implement that feature sort of like also shows how much we are in touch with the social aspect of things,
Yes.
Like making payments more friendlier and cooler and younger,
And social.
And social, yes.
Payments are social.
Like we always say, Ms. G, I mean, payments are daily, transactions, daily data. So there's no way, we can't also make it more appealing to the younger crowd,
Yeah, exactly. So if you haven't got Centbee yet, just download it in all the app stores. That's in Huawei's app store. It's in iOS and Android. Yeah. Just a note on the Huawei app store I've noticed is there's a lot of countries that aren't available.
Oh, yeah.
And I think that's because the Chinese store has a lot of restrictions.
It does actually. So we also might need to look into that, because I remember previously there was sort of like a limitation of the availability of stores based on certain regulations and the type of product we have.
Crypto. Even though it's not crypto, but crypto category.
Yeah. But we fairly are available in a lot of countries. Just check it out in the stores, guys. Remember, just to update those who have it. Yeah, man. Show some love, comment, subscribe. Yeah, mobile money on fire. Ciao, Ms. G. So as we're stepping into our second segment this week, we constantly talking about, digital cash,
yes,
digital payments, like we sort of like moving away from the traditional way of having cash. Mm-hmm. Now we have it digitally. Mm-hmm. But like, is that like the new norm of the future? Is that where we are heading?
Yes, the so-called cashless society.
Yeah, because I think that's it's been like the narrative that's been pushed like for the last 10 years, like no more paper, just digital currency.
Yeah, that seems on the surface a great idea. You know, we live in a digital world, and we use digital apps for everything. It almost seems a little bit archaic that we use these dirty pieces of paper and fake silver-looking coins and fake gold-looking coins.
Yeah.
So it is definitely something that when you reflect on in this world that we live in today, this digital world, that we still have to use these little funny little tokens, these paper tokens or metal tokens. So absolutely, this cashless society. Now, whenever we talk about Centbee, we say digital cash.
Yeah.
We want to use that term because that's how we understand Bitcoin.
Yeah.
And if you just look at the title of the Bitcoin white paper, it's a peer-to-peer electronic cash system.
Yes.
Electronic just means digital. So that's why a lot of our branding and our ads and our marketing material, we always talk about digital cash. And the world is talking about digital cash. And more than that, it's talking about moving away from these physical coins and tokens, these notes that we have.
Yeah.
What we traditionally, for I guess all our lives, for everybody's lives, have always thought of as money.
Yeah.
But we know that they're not money, they're just pieces of paper and not even backed by real money or gold.
Yeah.
So this is the flavor of the world right now, is that we're moving into a cashless world. In other words, a world where we don't have these physical pieces of paper and coins.
Yeah.
And when you think about it, it seems to make sense. I don't have any problems with it.
Yeah.
Just per se, I actually quite like. In fact, myself, I hardly ever have cash, physical cash. It's really when you want to pay loose change to somebody who's looking after your car or something.
It's more informal sort of like transactions.
That's right.
For micro transactions, like more, it's less informal.
Right.
Less formal, yeah.
At least that's how I take it.
Yeah.
But, around the world, everybody's got a different vibe about it. When I was in Switzerland, interestingly enough, the Swiss like cash. They like physical cash.
Yeah.
They use it all the time.
Cash is king, Mr. G.
The physical cash.
Yeah.
And then you go to a place like Sweden, and it's hard to find a place that accepts cash.
Wow.
So every country is moving in a different way and at a different speed into this cashless society where we don't need to worry about these physical notes and coins. But people like having that little physical piece of paper that you can just hand over.
I mean, who doesn't, Mr. G? I mean, it somehow gives you a form of control over your asset, basically, So it being digital somehow, makes you a little bit like uncomfortable because you still need a form of access to it.
Yes, exactly. The idea that if you have some physical cash in your pocket, you don't need to be connected online. Your phone doesn't need to have battery. Anywhere you are, as you say, cash is king. It talks. You can hand over cash, and that person is going to be fine and settled.
The transaction is settled right there and there.
Yes. So it just seems like the kind of utility that is almost necessary in a world where you are not always expecting to be online. So you can imagine around the world there's obviously different places with different connectivity levels and different digital access. We're talking about the digital divide. So that's the kind of idea, is that physical cash is very convenient. It's accessible, it's available, you don't need infrastructure to make it work. So it remains to be seen how the world is going to be evolving over the coming years into this cashless world. Now, the thing about it is that if it is more efficient and if it works better than physical cash, then it just seems natural that it'll take over, and eventually we'll only have digital cash. But there's also agendas behind the scenes. There are politicians, bankers, there are important, powerful people out there who believe that physical cash is inconvenient and untraceable. And when you have a physical cash transaction, there isn't any monitoring of that transaction. So you can think about government saying, well, it would be nice for us to be able to tax every one of those little casual transactions that you make. It'll be more income. And so, of course, there are now powerful interests behind the scenes driving us into this cashless society. So whether people want it or not, it seems that this is where it's going because the people in power want this. And there are a lot of reasons which I think we're going to cover now, and we're going to talk about all that. But we've got this tension, the convenience and the traditional comfort of having a physical note or a physical coin. Even if we know it's not real gold or silver, it's not worth anything, but we know that at least we can settle a debt in it. It is legal tender. And but so there's that comfort, that privacy, convenience.
Also stability, because if you have a physical form of cash, it's that amount. $10 is $10.
You're thinking there might be a hidden fee if it is an account.
If it's digital,
exactly. You've got it. You can see it. No one's going to be taking any fee off there. So we've got the tension. We've got the people who are comfortable and find it convenient to use cash, and then you've got powerful interests behind the scenes as well as normal people. I mean, some of us are quite looking forward to a digital world. I mean, again, I don't have that problem. Depends on how it's implemented, but powerful interests who are now driving us into a cashless society. And we see a lot of news and information online, on social media. A lot of people are afraid of a cashless society because, again, it kind of makes you lose control. And a lot of people are excited about it. So this is where we seem to be trundling. Who knows how it's going to turn out? I think that ultimately we will have a cashless society because, I mean, really, these physical pieces of paper notes, just for me, it just seems inconvenient. But if it becomes a system where you say you can have confidence, you have transparency, you have control and accessibility, well, then it's probably going to become a thing.
Yeah, definitely, because I do see it in a sense of a use case, because if we were to, compare with physical cash, there's quite a lot that's attached to that. Even the costs of printing, transporting, the security, there's just a lot when it comes to that. But when we speak in digital, there's less of all of those admin.
Right.
It's just accessible basically immediately to anyone.
Exactly. Now, this is what takes us into this new realm, which I guess we can dive into now, where central banks themselves are now wanting to get into the action.
Yes.
And there is this term that keeps flying around that you'll probably find on social media always being disparaged, and spoken about negatively, which is the Central Bank Digital Currency. And
CBDC.
That is something that we can dive into now. What does it mean to be a central bank, and what are the central bank digital currencies? Because we've just been speaking about digital payments, and everybody uses digital payments, just about credit cards and EFTs and these payment apps. Centbee is a digital payment. So it seems that digital currencies are around and people are using them. So what's the idea of a central bank digital currency? And I guess that's what we can dive into.
But first, Mr. G, let's dive into what is a central bank first, because if you're going to be talking about a system, especially the keyword for me is the central. We need to sort of define how it works in the current traditional finance system.
Yes, let's try and wrap that up in a nutshell. So what is a central bank? We know what banks are. Banks are these big buildings, these institutions. They take deposits from people, and then they loan that money out for mortgages or for car loans or something, and they offer payment services and credit and that sort of thing. So we know what banks are. Banks are these big money institutions. They manage our money.
More commercial side,
for people, for businesses. And so these are the institutions we all know and love, right? to a point. And so what the heck's a central bank? Well, if we go back in time, let's just quickly cover the sort of history of banks and how things got to where we are today. In the olden days, banks were just warehouses really for storing gold, and we've talked about this on other shows. Where once upon a time you would take your gold coins and you would deposit them at the bank, and they would give you a receipt, a little piece of paper, and then you could take that paper around and give it to others in lieu of payment, and then they could go and take that piece of paper back to the bank and redeem a gold coin or whatever it was. And that's how banking worked. Now, of course, with banks, one of their most important business models is earning interest on loans. And there's this concept called fractional reserve banking, where banks can take user deposits or customer deposits, and then they can loan that money out. So if you were to give the bank $100, I could come in and borrow that $100 from the bank. And then when I pay them back, they could give you your money back. Now, what banks do is they don't have, when they give loans, they don't have the full amount of money sitting in their bank as a deposit. So let's say I deposited $100 in the bank, and you and Aaron want to come and borrow $100. Now, the bank is going to loan out $200 or whatever it is. They don't have that extra, but they are just saying, well, it's unlikely that Lorien's going to come back and ask for that money now. So let's just loan it out, earn the interest on those loans, and then we can eventually settle everybody and everything's fine. And that's what's called fractional reserve, where they only hold a small fraction of the amount of money that they're loaning out. And so what would happen is some banks would be irresponsible and they would loan out a lot of money that they didn't have. And then if there was a bank run, so if people wanted to come and all at the same time withdraw their money.
Because I can imagine like a situation like that would happen. Like maybe a small town or a small bank in a small town, we're like, it's maybe we have a project at hand, or maybe some news broke out, and there's a panic, and we actually need to get our money.
And that's happened in history many times. And so when banks ended up in that situation, instead of just being the standard thing, which is, well, if you behave badly, if you behave irresponsibly, then you're going to have to suffer, and you're not going to last very long. So, we need a culture of responsibility where banks aren't just lending out recklessly. And it's just like any other business. If you go to a business and they're not delivering and they have a bad track record, you're not going to go to that business. So businesses are motivated to be as responsible and to offer the best possible customer service, and then they can thrive. But in this whole banking world, and in this world where the people constantly want government to solve their problems, when these bank runs would happen, people would obviously now not have their money, because they would go to the bank doors would be shut, there would be no money, and the people would lose out. And this is what's happened in history. And so this idea of central banking evolved that said, well, let's create another kind of bank that can lend money to these commercial banks. So when they do have an issue, like they don't have the money on hand to be able to pay out the depositors or something, then what the banks can do is they can go to the central bank, and the central bank will lend them that money. So they call that central bank the lender of last resort. But what central banks have also become now, and a central bank, just to also add, is not a government institution. A lot of people think that it is. It belongs to the government. But it is actually a private institution.
So it's a business, essentially.
It's a business. And the idea is that if the business is responsible and successful, it can pay out the shareholders and it can thrive. And also, it's not going to be politically motivated. That's the idea, is that if you have a central bank, it mustn't be something that is an arm of the government, because governments can be corrupt,
misuse it,
and they can misuse it, and they can create inflation through it, and do all these things. So the whole idea was that the central bank would be an independent private institution that could serve the banks, and also facilitate whatever it was with the governments itself, if the government wants to borrow money or something like that. So this is the idea of a central bank, was that it would become this private institution that could then act as a lender of last resort, and make sure that banks don't fail. And then also other things like control the monetary policy, which means how much money is issued into the economy.
That's quite complex for a business, just a mere business, to control an entire country's...
Well, this is how it is. This is the situation. I mean, you don't have to be a fan of the situation, but this is how it is. And then another thing that they do also is interest rates. they dictate how interest rates should be in the country.
Yeah.
So if they see that there's a problem with inflation, they can raise the interest rates, or if they feel like the economy is not doing so well, they can lower interest rates. Mm-hmm. So central banks are quite powerful institutions.
Very much so.
Manipulating things in how the country works, interest rates. They also regulate financial institutions like Centbee. Centbee, we have to answer to the central bank here, and other central banks around the world.
Yeah.
So there are regulatory authorities. So they are these very powerful institutions that issue the currency of the land, so a dollar or a yuan or whatever, and then that money gets cycled through the banking system through to use customers and businesses and stuff.
Yeah.
And that's this big happy situation we have.
Yeah.
This big central organization, a private organization, so they say. I mean, look, at the end of the day, they can be called private, but the way they behave really is like an arm of the government. They are kind of like a government institution, just the way they behave, but they're supposed to be private.
Yeah.
So now, and also just remember the currencies that we use today, the fiat currencies. So if you're in America, the dollar, or if you're in Japan, the yen, South Africa, the rand. The central bank is the one issuing those currencies. Those are central bank notes. In the olden days, of course, the central bank had gold, but now it's just a note, it's just a piece of paper. You won't see on that note, I promise to pay the bearer on demand, $10 worth of gold anymore.
So Ms. G, what you're saying is that the central bank is the mint, basically.
It is. That's well, it's not the mint, but exactly.
They run it.
Yes. So now we have this idea that the money that we use in society comes through the banking system, the commercial banking system. That money is issued by the central bank, who then governs the monetary policy of the country. And so when you have a bank account, you don't have a bank account with the central bank.
Yes.
You've got a bank account with your local bank.
Yeah.
And now what countries are thinking about and governments are moving towards is not just a cashless society, but also a society where the central bank itself is issuing accounts to customers who can then have deposits at the central bank. And that means then we are now going to be using these currencies directly at the central bank, and they're going to make them digital, which means that they are going to be these central bank digital currencies.
Yeah.
And that's really the term, CBDC, central bank digital currencies, where normal users, you and me, and businesses are going to have accounts at the central bank instead of at our local bank, and we are going to be using these central bank currencies, probably on a blockchain, most probably on BSV, and the government, the central bank will be able to then govern how money is used in the economy, because they are going to be issuing the currency directly to people, and also they're going to be able to, as I said, control policy through that currency. So that's a big mouthful, a big background on central banks, what they are, and this idea now of the central bank digital currency.
So Michi, as we chatting about all these CBDC currencies, I see there's quite a lot, and they all focus they're trying to focus on the blockchain technology, but they're focusing on different blockchain technologies, not the main one that we are in support of. I'm going to start off with the e-Naira, which it's used by the Central Bank of Nigeria.
That's right, the e-Naira. That's and people are actually using it today.
They are. And their technology platform is strictly the blockchain.
Which blockchain?
Blockchain technology.
Oh, okay, not sure which one. Okay, we'll have to find that out.
And then we have China with the digital one.
Yes.
And they are using the proprietary. With the digital one, they're using the proprietary blockchain. So
they've
technology.
made their own blockchain for that.
Basically, and then we have the Cent dollar from Bahamas. They're using also a custom blockchain solution. And we have the Bakong from Cambodia. They're using a Hyperledger.
So Hyperledger is an IBM product, and so it's IBM's blockchain solution for enterprises.
Oh, okay.
Yeah.
And then we have Ikrona from Sweden. And they're using the R3's Corda blockchain.
Yes, R3 Corda. So that's actually, it's not even technically a blockchain.
Oh, yeah.
That was created, one of the founding engineers for that was a guy called Mike Hearn, who was an early Bitcoin developer, who worked with Satoshi remotely.
Oh, yeah.
So he was very prominent in the early days of Bitcoin, but became so frustrated with the crypto community wanting to force Bitcoin to stay small and to change the protocol. So he's a real OG.
Oh, yeah.
And became so frustrated with crypto and the BTC community that he just thought, that's it, I'm out of here.
He just branched out,
unfortunately.
Yeah.
And he then started working with some others on this blockchain, this technology called R3 Corda.
Yeah.
But as I said, it's technically not a blockchain. But interesting that they're using it.
Cool. And then we have Digital Lira from Turkey. They're also using a proprietary blockchain. And then we have, this one is both available in Canada and Singapore, which is the JASP Ubin project.
Okay.
Yeah. And they're using Quorum.
Okay.
Quorum, an enterprise version of Ethereum blockchain, And then we have, there's quite a lot actually. We have project Ethanon, Lion Rock, Thailand and Hong Kong. They're also using the Corda blockchain platform. We have the Stellar project, which is available in Europe, Japan. They're using various blockchain frameworks.
Okay.
And then lastly, we have, in fact, we have quite a lot, man.
Okay. Well, I guess we get the idea is that there are many different CBDC pilots. Some of them are in actual action.
Because I also wanted to mention the Project Coca, the South African one.
Yes, that's right. Project Coca, I think they were also using an Ethereum.
They're using a Quorum,
blockchain. So we can see that around the world, every country just about must be looking at creating a CBDC. Not all of them on blockchain, but it just seems that blockchain is the buzzword.
It's the buzzword
when it comes to CBDC.
Yeah.
And what's interesting though is that none of those blockchains that you read out was the BSV blockchain.
You know, I was actually hoping to come across one that actually uses the BSV blockchain. As I'm reading through, and I'm like, okay, like none of them are actually using the actual.
Right. And that's why none of them are going to ever succeed. To put it frankly. So, the idea that, we saw some Ethereum ones there. None of these blockchains can scale. Even if you use a proprietary version or you use a private blockchain. A private blockchain means a blockchain that's run by supported by machines that you control instead of decentralized.
It's centralized, basically.
Yes, it's a centralized system. So everybody, all the participants are part of the gang, part of the group. And even in spite of that, they still are struggling to scale those blockchains to facilitate the numbers of transactions they're going to need. The Project Ikoka, one that uses Ethereum, it had problems. It had gas fee problems and all that. So none of these blockchains, and as I said, Corda is not a blockchain, and Hyperledger, it's barely a blockchain as well. None of them are going to be able to get out of the lab because they're all going to hit that scaling issue.
Funny you saying that, because as we were going through them, I'm also checking the project statuses, like where they are. And most of them, you can tell that they're still in developmental and research phases.
Exactly. And their costs are high. So none of these governments have figured out yet which blockchain. Now, in my mind, it's clear BSV blockchain is going to be the blockchain that supports these CBDCs. Because BSV is the only blockchain that can scale. We have Terranode, which is doing millions of transactions per second, and the whole nature of BSV being that regulatory compliant blockchain with all the right things in place, as well as the peer-to-peer nature, that SPV, the simple payment verification method, where you can do and trust an offline transaction. That's part of BSV. So it just seems inevitable that eventually these CBDCs are going to, because it doesn't look like they're going to stop anytime soon. There might be some countries that are slower than others, but they are going to need to find a solution. And creating a solution for this, I mean, this was the big problem, right? Creating a digital currency that was reliable and that you didn't double spend. That was Satoshi Nakamoto's invention. That's why he deserves the Nobel Economics Prize.
He really does.
You know, a lot of people have said that he does, because he solved this problem of a scalable transactional network that was reliable and secure, and most importantly, low cost. And so these CBDC projects are going to eventually find BSV, and that's going to be a perfect use case for BSV blockchain, because BSV blockchain, or Bitcoin as we like to call it, because it is a ledger, and it's a multi-purpose ledger. It's not just money, it's not just cash. It can be used for cash very effectively, but it's also a general purpose ledger. This is why Satoshi created script, Bitcoin script, inside the transactions, because then what you can do is you can code onto that transaction a little marker or something that says, I am actually $1. And so this is why BSV is going to be the blockchain that these CBDCs get created on, because of its low cost and scalable nature and its programmable nature. Now this is what I think is going to be inevitable. We're going to get to that situation, but it seems that we're going to have this period right now where these CBDCs are piloting on these different blockchains. They're going to hit their heads against these scaling issues and the cost issues, and eventually they're going to look around for BSV and they're going to find it. So this is why, you know, we need to embrace this evolution of transactions. You know, a lot of people, and you know, even myself included, the idea of having payments that are online, it does mean that there is going to be a situation where you feel like you're being watched, you know, and it's just inevitable that if something is digital, that it gets recorded. And so there is this discomfort about these digital currencies, and a lot of people think that, you know, and we can get into the negative aspects of these CBDCs, that these currencies are going to be something that controls our lives. But beyond that, and we'll get into that now, this idea of having a digital transactional network lives in Bitcoin SV blockchain. And that's why we are so bullish on it. And if Bitcoin is going to become something that is valuable, if we have BSV and we want our BSV tokens to grow in value, it has to be useful. And we've spoken many times about commodities and the utility of blockchain, making it valuable. BTC has no utility, but BSV has utility. So if we want BSV to be used like a commodity so that we can then use its token as cash, we need CBDCs. We need a commodity ledger to be used, and CBDCs are eventually going to find BSV, and that's going to create the commodity basis for the ledger. So, and also remember that BSV is, even though it's public, it's private as well. So when it comes to the privacy of transactions on a CBDC, that's why BSV is such a great tool. Because it has the public properties, the traceability properties of BSV blockchain, if a CBDC was issued on it. It has the double spend capability where it stops double spends from happening, but it also has the privacy. And if we want to feel comfortable with digital currencies, we have to think and know and understand and believe that the currency, our payments, are private. Unless, of course, there is some reason by law enforcement or regulator to come in and dig into that transaction. That's just the world we live in. So BSV is the perfect platform for these CBDCs. And it's exciting to see how it's going to play out over the next couple months, years. We don't know when it's going to get there, but to me, it's inevitable that these CBDCs will eventually culminate onto BSV blockchain.
Straight up. And I'm glad that they're also just exposing the fact that, these other blockchains will never achieve that. So it's only inevitable that they move towards, the BSV side.
Right, exactly.
Cool. I mean, Mr. G, when you're talking about these CBDCs, I look at it as a way of sort of like modernizing payments.
Yeah.
It's like a better way, basically, of us moving money.
Yes.
Yeah.
Well, that's the idea, right? That's what we're being sold on.
Yeah.
Is that these CBDCs are going to be more modern, more digital.
I mean, that's a positive.
Yes, that is a positive.
Yeah.
I think that we should look to that because, as you mentioned earlier, it's very expensive handling cash. And, with COVID, what was interesting is that people started using cash less because of the perceived health risk.
Yeah.
And we saw how digital currencies and digital transactions really spiked, especially across the emerging economies over the whole COVID period. So, there's been a definite drive into digital payments.
Yeah.
And clearly there's an efficiency when it comes to a digital transaction.
Yeah.
And so this is what we want. We want transactions to be cheap, efficient. You don't have to have cash on you. It's not dirty cash. It's clean, very, very neat. It's supposed to be cost effective. It's supposed to be secure. You don't have to have cash on you. You can just do a simple digital payment.
And also the inclusivity side of things. Like it includes people who never had access to other means of services.
Yes, when people talk about CBDCs and financial inclusion, though, I'm always a bit skeptical about that connection because, we have had digital payments before through commercial banks or just fintechs who offer financial services.
Yeah.
And so, I don't really think that a CBDC is going to bring about financial inclusion any more than what we have right now.
Yeah.
But for the advocates of CBDCs, absolutely, they say, well, this is a tool for financial inclusion. If anything, maybe because it reduces the costs of transactions, at least in theory.
Yeah.
So there's that. Also, what's very important is that central banks, they govern monetary policy, how money operates in an economy, and how much of it there is, and and interest rates and all that sort of thing.
Yeah.
And so they want to be able to govern monetary policy more effectively. And when you have physical cash, it's very hard to be able to do that.
Yeah.
Let's say you want to put interest rates on, and in some countries they've done this, like putting negative interest rates, making that a reality. It sounds bizarre that you can have a negative interest rate.
Yeah.
But to do that, if you have a negative interest rate because you want to stimulate the economy or something, that means when you borrow money, that's great.
Yeah.
Because you're getting paid to borrow.
Yeah.
You're paying negative interest. Wow, what a cool thing. But if you are saving money, that's bad because now you're not earning interest, you're paying interest.
Yeah.
And so if the central bank wants to impose something crazy like a negative interest rate, which they've done repeatedly around the world, then people are just going to take their money out of the bank. They're just going to withdraw it or stick it under a mattress. Now at least it's not they're not paying interest keeping that money in a bank.
Yeah.
In the good old days, you earned interest on that money.
Yeah.
But if the central bank wants to be able to govern that monetary policy and put something like that on, a negative interest rate, how are they going to stop people from withdrawing the currency out of the banks? Well, make it digital, and then just say no. When somebody wants to do anything, the only thing they can do with it is spend it.
That's the only thing, literally, because if we essentially are killing the physical side of cash, that means the only way sort of like to move money is about spending it versus having a physical.
If you want to hang on to it and earn negative interest, you got to spend it. Jeez. So that's how they would like to be able to manage things. They want to have full control over things and be able to put funny policies in place that that we're forced to live under. So absolutely, there's that whole idea of monetary policy. But then, of course, if you have a central bank digital currency and everything's tracked, then it's hard to do money laundering or terrorist financing or sending money overseas more than you should. So they really want to be able to absolutely control money. And this is what makes a lot of people kind of afraid.
It is nerve-wracking. I mean, for the fact that we won't have physical cash, like, it just shows you, like, they are in full control because you are in the system. So that means you can't get out of it.
Yes. I mean, well, let's go straight to the negatives then. I mean, that is a negative. When you have, I mean, well, the first negative, of course, is if you don't have access. If you are on the other side of the digital divide, then digital currency is not going to help you. And if you're in an emerging economy, there's like a lot of people out there who maybe live in rural areas where there's no access to connectivity, or they can't afford a mobile phone or something. And so, of course, if we move digital, there's going to be financial exclusion. Now, of course, what we see around the world, though, is that data access and mobile phone penetration is just growing and growing.
Big time,
mobile phones are getting cheaper, and more and more areas are being covered.
I mean, look at the adoption in Africa.
Yes, exactly. I mean, most people use digital money, mobile money.
Mobile money,
I mean, in Kenya, it's 98% of transactions
which
go
is
through.
Crazy,
So there's definitely the digital divide is closing, but it still exists. This idea of being able to govern policy. Now, remember, central banks are supposed to be independent, but they are an arm of the government. And what if there's government policies?
They are, Ms. G, because that's why initially I was like, okay, like, for a business to have so much control over a country's monetary policy, that's quite a big responsibility. Somehow there has to be government's hand or involvement in that.
Yes, it's very clear, and they definitely are joined at the hip, central banks and governments. And so, when we think about monetary policy, fine, it sounds kind of technical and boring, but governments have policies too. Maybe they want to stop people, they have a campaign, they want to stop people smoking, so they're just going to be able to stop you from making payments to the things that that they don't want you to buy. Because remember, this idea of digital currency, especially on a blockchain, it's programmable. And so they can program rules into that currency and saying, Kage is allowed to buy 1 box of smokes a day, or he's not allowed to eat any meat, or, this is what people are afraid of, is that when government now can get involved, they can inflict government policies onto you that you would rather not have. So this is another fear, is that now we're going to be told what we can spend our money on and what we can't spend our money on.
That's crazy. That's a very scary future, because essentially when we think of enabling or including people in a financial system, it's about having that free market and freedom of being able to do what you have to within the rules, of course.
And privacy.
Privacy, exactly.
The thought of government knowing every single thing you're doing.
That's intrusive.
Everything you're spending on, when you're spending on it.
That's intrusive.
It's you can see how it leaves a kind of funny taste in your mouth. Like, hang on.
It really does, Richie. Because if you think there's a lot of money that moves undocumented. So and we were saying it's more informal transactions, which also contribute to the bigger scale, But now those microtransactions being tracked, they're also
tracked and taxed.
That's crazy. It kills a free flow of an economy already.
Yes, well, from the government's perspective, I mean, they think, well, that's our money. Like, there shouldn't be any transaction that we don't have a cut of, if you're the government. So, I mean, that pack of gum, that little small thing that you're buying, they want their cut. They don't want to. So you can see how this is now, even though it seems that it's inevitable, we're driving into this digital world, having government control somehow through the central bank money and how it's spent and who spends it, and also being able to implement policies that might have very negative effects down the line. I mean, that's a lot of power to be able to control money. So even though there are, as I said, there are lots of people on one side who think, yes, efficiency, modernization, financial inclusion, low cost, there's a whole lot of other people, and especially online, if you go into social media, who are very anti this whole idea. And it's. I mean, I'm also personally not that comfortable about having government and central banks being able to control every aspect of our lives, especially from a monetary point of view. But at the end of the day, the only way we can stop this is the usual way, which is, if you're lucky enough to live in a democracy, is to try and educate as many people about this as possible, and then maybe you can influence, and which is the way you're supposed to influence government is through democracy. So there is no technology that's going to save you. I think this is another thing about crypto people is, of course, they hate this idea. They hate this idea of CBDCs. They hate this idea of government controlling our money even more than they do already. They want out of the system, and so they are looking to blockchain to be able to craft a version of blockchain that becomes unstoppable. And so they don't have to worry about the tedious process of trying to vote in a government that doesn't want to take our freedoms. They're saying, look, let's try and build technology where they can't, even if they want to. So it's quite an aggressive approach. It's like, we can't trust democracy. We hate what these guys are doing. So guys, let's build a technology that can stop them. And that is the crypto mindset. It's born in a place of freedom. But now they believe the only way to achieve that freedom is through anarchy.
And which lacks responsibility, because you need to be, as free as you are, you still have the responsibility to act accordingly. Exactly. Especially if we're talking finances and transactions.
Right. So I think that's it in a nutshell. I mean, we've spoken quite a lot actually about this topic. It's kind of it seems boring on the surface, but it has huge impact on our lives. And if and this is going to affect everybody, even if you don't care about crypto, if you don't care about blockchain or BSV. CBDCs are outside of that world. They are the mainstream, and they are going to come in a big way. And if we are not ready for it or alert to it, then we're just going to be swept up in it. So it's very important to understand this concept that central banks who run the system and are tied to government, joined at the hip, they want to take over every aspect of our finances and control every aspect of it and have insight into every aspect of it, and for government to take a cut out of every aspect of the transactions. So it's a scary thing. We want to see BSV succeed, and we want it to be a commodity ledger. And from a purely technical point of view, without any political ideology or anything like that, again, CBDCs are going to be perfect on BSV blockchain. That's what BSV is really built for.
Definitely.
And I think that soon we're probably going to see an example of maybe a small country leveraging BSV blockchain for their CBDC. I know that there are companies out there right now who are looking to do that. And so when we see that, at least it's going to be a nice example of how BSV can be used as a commodity ledger and not just as a cash token. And as soon as you see that, now you have something of value, not just this speculative token. So let's see how it goes. Of course, I don't think CBDCs will ever eliminate BSV as a cash token. I think that'll always be an alternative, especially interestingly because if you have a CBDC on BSV, it actually is more expensive than just a native BSV transaction, because the native BSV, in other words, if I just send a coin to you, the transaction is a very small transaction because it just has some very basic info in it. But if I want to now load more information onto that transaction to show that it's actually a CBDC or it has some kind of logic in there, then that's going to be a bigger transaction, and it's going to cost a more to process that transaction. So I think BSV will always be able to compete as cash with traditional, fiat currencies issued on a blockchain.
Because again, Mr. G goes back to the value, and we see the value that lies within the BSV token, because there is utility, scalability. It's cheaper.
Yeah.
So there's no way for us to look at any other blockchain.
Yes. So we also have dropped a hint on the show that we're going to be including a stablecoin. And stablecoins we haven't actually spoken about. And a stablecoin isn't actually a CBDC.
Because I actually want to thank Mr. G for actually touching on that, because I find it there's a bit of a gray area between for me.
Yes.
Like, okay, a stable coin, okay, self-explanatory in a sense, but CBDC, that sounds like a stable coin on its own.
It is a stable coin. It's a stable coin issued by the central bank. But other stable coins that you see, like Tether or USDC or this new USD stable coin on BSV called Money, MNEE. Those aren't central bank digital currencies, because there is an issuer behind those currencies. So there is a company like Tether who is holding reserves, in other words, money, which is supposed to be a one-to-one backing on the stable coin. And so there is a company now holding a pool of money and issuing a token that is backed by that money. So that's different from a CBDC, because the CBDC is the central bank itself issuing that stable coin. So it's a subtle difference. One is issued by a normal company like Tether, and the other one is issued by the central bank of the country.
So in terms of that, I mean, one being issued by a company and then one being issued by the the central bank. How are they different? Because you spoke of the central bank having like an upper authority basically on how the money moves, interest rates and stuff. But now when it comes to the stable coins being issued by a company, how does that work?
So the difference there is that the stable coin is just issued by a business. They don't have a connection to government. They're not a regulator. They just want to be a business that offers a token that you can redeem as cash. And so they don't have the same agenda. Whereas the central bank has an agenda. They are governing monetary policy. They really have their hands in the country, and as I said, connected to the government, influenced by the government. So that's the difference. Having a CBDC is bundled with all this agenda that you might not necessarily appreciate from a totalitarian point of view.
Definitely, because from a stable coin point of view, you have a choice of acquiring it or not.
Yes, exactly. And that company could, but if they want to stay in business, is probably not going to be telling you how to spend your coins or putting interest rates in there without you opting in. So it's because you're dealing with a business who's just purely profit motivated. They want to satisfy the customer. You see, when it comes to government, they want to satisfy themselves.
They don't care about. They have no customers.
Yes. They got what is it? Subjects. Cool. Okay. Well, I think that's I think pretty much covers it. CBDCs, central bank digital currencies. They seem to be coming. They seem to be a little bit scary, but we still, as citizens, should have a say in how these things unfold if we are aware. So if this is the first time you're hearing about CBDCs, go and investigate it and look it up. And if you really hate them, then educate people, and maybe you can influence voters to guide your country in the right direction. But don't think that there's a blockchain out there that's going to save you. There is no blockchain that is unstoppable or unconfiscatable, uncensorable. Every blockchain, if the government wants to, they can shut down. That's just how it is. No amount of non-mining nodes on Raspberry Pis on laptops around the world is going to stop the government. That's the big myth. The big myth of decentralization. The government can't stop you.
I guess that's the bait.
Yes, it's the fakest of fake narratives that suckers so many people in. Yes, but CBDCs, that's the idea. Central bank digital currencies, and it's going to be interesting to see how it plays out.
Cool. Thanks for that, Ms.
Cool.
G. Always an awesome unfold on, such information. I mean, this is something that people really need to be clued up about,
Yes, this is impactful now.
Yeah.
This is not just companies playing around with tech. This is government level stuff.
And also, I mean, with our show, that's what we also try to cover, Ms. G. We're not just putting out fluff out there. Like, our conversations actually, are like around transactions, payments, things that could affect like your day-to-day lives as a person,
Exactly.
Yeah. Cool. Shot for that, Mr. G. So yeah, Mr. G, we're going to be stepping into this week's user questions and feedback. Our first one comes from Jonas Linden. Actually, he's just thanking us for the answer we gave him last week. Sorry, man. So he's saying thanks for the answers. And by the way, I love the new DeFi episode. Hope BSV come through soon.
Okay, cool. Yeah, so we spoke about on our last show, episode 36, about DeFi, decentralized finance.
Yeah.
And Jonas, thanks for returning. Thanks for coming back and watching the show again. We appreciate those comments and feedback. It gives us encouragement to keep doing the show.
Yeah.
As we keep on saying, we want to make this an information show for you, so you guys can learn about the real value of blockchain and BSV, Bitcoin, and Satoshi's goals and what he wanted, and also what's more likely than not to succeed in this whole space. Just so you can avoid the pitfalls and the rabbit holes and the red herrings that get thrown across your face when you're looking into crypto. This is it's a fascinating subject, but definitely needs digging into, because the information that's out there in the mainstream is definitely not right.
Definitely not, Ms. G. Thanks, Jonas. And also, this for me just shows that it's proof that we have real people. We're not just, like fabricating comments and feedback. Like, we literally have people checking out the show, and he's thanking us for the reply. So thanks for that, Jonas. Our second one comes from JTK Ventures. They're saying, great information, guys. Keep up the important messaging and awareness sharing.
Thank you.
Cool. Yeah, I think we've come to the end of our show.
Okay, great stuff. Thanks, Kage. And thanks all the viewers for bearing with us over this topic. Not the most exciting one, although actually it is pretty exciting. I mean, it's world-changing, right?
It is, Ms. G.
Yeah, so it's good to know about it and know it's coming, because this is not a Bitcoin thing. This is a global government paradigm shift moving into a new era. We've had central banks for not that long, and they haven't really done very much for society, it seems. And now that they are moving into this idea of digital currencies that they themselves issue to the public and that we have to use, and now we're going to be, told how to use them. Definitely very frightening.
It is.
But it's just where things are heading, and hopefully we can keep it at bay as much as possible. But on the other hand, central bank digital currencies, if they are inevitable and they are going to come here, the best place to run them is on Bitcoin SV, because Bitcoin SV is the only blockchain in the world today that can facilitate the enormous number of transactions that are going to be required on that blockchain, if that blockchain is supposed to facilitate all the world's payments and other transactions. And not only is it going to be more effectively used on BSV blockchain, but it will be private, because BSV blockchain is private. That's what Satoshi wanted, a private blockchain. But it's also public in a way that if law enforcement wants to feel comfortable, they can come and trace payments. That's the traceable nature of blockchain. And also BSV blockchain allows us to use these digital currencies in an offline way.
SPV.
I mean, that's about as groundbreaking as you can get.
Straight
So
up.
digital divide now kind of disappears. If you're in an area where there's no connectivity, no problem. So this is going to be what really makes Bitcoin shine, I think. People will finally see, wow, look at the capabilities of this blockchain.
Definitely.
So if you're bullish on Bitcoin SV, well, let's bring the CBDCs. Let's see how they turn out. Let's at least get some nice test cases running on BSV so we can see the capabilities that it has. And we can kick the tires on Terranode when it comes out, and And we can really see if Satoshi was right that Bitcoin never reaches a scaling ceiling.
Yeah,
this is going to be a true test.
It is. That's why I find it exciting, Mr. G, like you say, you know.
Exactly. Yeah, that's right. Yeah. Cool. Okay. Well, that's it then. And so I just want to thank everybody. Thank everybody for joining us on the Centbee Show. Thanks for your comments. Please leave feedback if you like the show, if you don't like the show. If we say something wrong, tell us so we can correct ourselves. You know, we aren't the know-it-alls.
Yeah.
We've been Bitcoin now for more than a decade, so we definitely have been around.
Yeah.
But if there's anything that we need to know about, please let us know. I read all those comments. Kage reads the comments and we reply there. And we can just keep pushing the show, and know that there's people at least out there benefiting, like Jonas, for example.
Straight up, Ms. G.
Cool stuff. All right, well, I want to thank everybody for tuning in today to the Centbee Show. Please come back soon.